Okay, well, we're going to bring in Peter Thomas, chairman of AuSecure, and the man when it comes to everything related to metals, commodities, gold. We got him here. Thank you for joining us, Peter. Let's get you two right to it.
Hey, Peter, how are you, man? I'm good, man. Listen, I believe you are the machine when it calls gold price over 3,000. You weren't kidding around. Look at this.
Well, I remember quite a while ago. I mean, in last year, you asked me, where's gold going? And I said 3,000. And you gave me a look like, uh-oh. Pete's gone and lost it now, right?
Well, when you hear prices of gold and silver and copper, and then we'll talk about that too, going through the roof pretty much, that's usually a sign of recession and people are getting scared, right?
Well, I mean, it is referred to as the safe harbor for equity. There's no question that owning commodities, but especially precious metals, is certainly where you want to be. It's been a good hold of value for the last 4,000 years. So why isn't it good now, which is the logic behind it? And we're seeing a lot of people climbing into gold. And what's interesting, Steve, is that this week, first time, people have normally been coming in going, how much is gold? Well, it's, 3,000. They're like, I'll buy silver. They buy the alternative. Now they're like, I don't want silver. I'll buy a tenth or I'll buy a quarter. So we're seeing people, they're just shaking off the 3,000 and just climbing in. And that's the first time.
Let me ask this question. You and I talked about this last time.
Sure.
At Costco, people were buying gold in a form.
They
were selling out at Costco for gold. I mean, I don't know. I don't normally buy gold at Costco, right?
Well, first off, there's a caveat to that. They're getting certain store credits and incentives on it. So people were, in effect, after enjoying the credits, were buying it below spot. So the person that delivers that gold to him has been a friend of mine for 30 years, and PAMP is a great company. So you're getting a high quality product at a discount. And think about it, everybody that bought it at the lows for that short term, they did real well. So, I mean, you can't scoff at somebody that makes a profit.
No, of course not. And after they sold out of Costco, we saw the new numbers this morning from Signet Jewelers up 12 and 13%. So are those customers now that can't buy gold at Costco now, they go into the jewelry stores to buy gold?
Well, not so much in America. That's more of an Indian type of tradition where they'll wear the gold. I saw when I was at the refinery recently in Cairo, I saw a lot of women buying gold for the same. They wear they instead of going to the bank, they wear it, But Americans aren't traditionally known as buyers of jewelry. They would rather buy the coin or buy the bar, Steve, as you pointed out.
Right. So let's talk about that for a second. You've been talking about this for I don't know how long, that the central banks are buying it. So the mothers in India and the mothers overseas are wearing their gold. Yeah. But now it just seems that we know that the Russian banks are buying it, right? Talk to us about the central banks and their gold, the gold.
Well, I mean, it's interesting in that a metal, or let's just say a commodity, needs a base. I mean, going back to 2022, central banks bought a staggering $70 billion in gold. And they started getting aggressive in late 2023, 2024. We saw China lead the charge for 17 continuous months, buying anything between, I saw bids for 9 to 13 tons a month. So when you point out central banks, it's rightly so. They are the biggest player, and they've slowed down a little, but not much. I mean, last week, Poland came in and bought 4 tons. I mean, we're seeing new players, Azerbaijan coming in. We're seeing guys that we've never seen before buying quantity.
Yeah. And, it's interesting because we've heard about it for the last few months about how President Trump and Elon Musk are going to walk into Fort Knox, and they're going to start doing all kinds of numbers. They're going to find out how much gold's in Fort Knox, and we haven't heard a single thing about that in the last 3 weeks.
Well, I mean, it's been decades since anybody's done an audit. So, and I will tell you something: as having run, owned, and had my own vaulting system for a number of years, it's a very complicated thing. It isn't just walking in and counting bars. I mean, it's very systematic. You're going to want to take periodic bars, throw them in the furnace, melt them down, see exactly what you have. A lot of people that I know that, hey, it's not pure gold. Some of it is a little lower down on the carry. So we're going to have to see what the plan is put together, who's brought in, and how many years they plan on doing the total audit.
Yeah, and it seems to me that when you're looking at, we just talked about with Steve Flanagan a few minutes ago, the policies and the questions around tariffs, that's a more of a higher level talk like you and I would have. But it seems to be trickling down to the regular consumer that they're getting nervous too, and they're buying gold. They want to know what's in Fort Knox. They want to know now what's going on with the ECB or Azerbaijan buying gold. If you could, and pun intended, melt it all down into one line and say, this is exactly why gold prices are going up, how would you melt that down into one line?
Well, I in one line, I don't think it can be done because it is a myriad of factors. First, remember, political tensions are a big contributor to metals. So we have to go the Ukraine. We have to look at Israel this week opening up 3 new fronts with aerial attacks, including bombing some key points in Lebanon. So we have, between the Ukraine and the Houthis have shut down 70% of the travel there, and insurance rates have gone through the moon. So we see the nervousness from the Middle East. We see a lot of people. I was sitting in on a deal the other day, and the guy said, all right, I'm going to settle it in euros. And the guy went, I don't want euros. And I was like, what? He goes, too much currency risk. And I was like, really? He goes, yeah, we're only taking dollars. So we're seeing nervousness about fiat at a higher level, and we're seeing political tensions at a higher level. And then, of course, we have a new president and new policies, and people with Trump, you never know whether he's just throwing it out to set up another deal or if the policy is in effect going to hold. So anytime you have uncertainty, Steve, like we have now, you're going to have higher prices. So that would be my one line.
So we asked Steve Flanagan earlier, look, and you hit the nail on the head, Peter, that it's uncertainty that's really got this markets all out of whack, right? Gold going up, markets coming down, Bitcoin all over the place. Right. What is it that you want to see to stabilize it? What things, we talked about it with Powell today. Will he stabilize it? Will these things you just mentioned, the Houthis, you mentioned Ukraine, do we need to see one little thing to stabilize this, or do we need to see a myriad of things?
Well, I think stabilizing is such a critical point you just touched on, Steve. The thing is that gold above 3,000 and holds that level, let's say it trades there for 3, 4, 6 months, whatever. And once it's stabilized and builds a base, then, we could see legging higher, but that's the bottom line is stability. So the question becomes, are we going to take the war premium off? Will we see, Bibi come out and go, hey, we're not going to bomb anymore in the Middle East. Well, the hostages have all been freed. We're going to try to make nice. The Ukraine with Putin all of a sudden comes to an end. We have better a consecration of all of this. Then we will not see the stability. We will see gold pull back. Not even a question. Anytime peace breaks out, tension comes off, fine. And as you've noticed, and I know you watch the long-term bond, the 10-year has been drifting down a little bit, So
304, yeah. You just mentioned something that I'm going to probably put into a social media post.
Oh, excellent.
The war premium. All right. Yeah. So what is the war premium on gold right now?
$400 to $500 right now.
Woo! So you're saying that if war does not break out and everything's okay, the price will go down to $300 to $400. If war breaks out, $300 to $400 the upside, right?
Absolutely right. If you remember June, we were putting our customers, IRAs, IRAs, everybody was in gold with my price point of 30.50. We almost tickled it. So we are at the point now where we're taking a lot of profits. We're taking stuff off the board and we're watching. Wait and watch is a position, which is uncertainty. And if we see the wars come back, then the market will break down, and then we'll consider where we're going to re-enter.
And you just said an interesting word. You said wars with an S.
It is.
Yeah. So is there a specific war that you're specifically watching, or is it all of them in general?
Well, no. Let's get real. Let's drill right down on that. And World War. Trump said it best. He said, "Look, we're looking at World War III. The Russians are very serious about people being on their borders, and we must face the reality that World War III has a greater potential than at any other time, and it will break out with Russia. So the idea of that settling in, that would be my number one, Steve.
All right, so you're saying let's watch Russia, and does that mean Ukraine, or does that mean Russia and Poland? Does that mean Russia and Europe?
No, I think Russia and Poland have always had their border difficulties, shall we say. But the thing is that the Ukraine is the issue. When Zelensky came in and blew up that deal, was very, very strange indeed. And he's now back in line, and hopefully we will have a come to Jesus moment with Zelensky.
I think there's more to Zelensky than we know about right now. Yeah. Okay. All right. Let's get right to it. I'm gonna ask you. You have been so right for so long on the gold market. Sure. All right. Today is the 19th of March. Yep. 1st of April comes around. What are you thinking in gold from here, up or down?
Down. I think that Trump will succeed in getting war to break out everywhere. I would say we'll probably be about 2780 would be my first stop.
So there's your 300 to 400 premium you said, the war premium, that you think that war won't break out, nothing's going to be, and everything's going to be fine, and gold will come back down. Is that right?
Yes, and I think something else that you've also tried to cover very well on your show, Steve, is tariffs. Yeah, and we get a chance to mention that. And you remember I said to you, we'll probably see tariffs on aluminum and steel, because we had a great deal of dumping in the United States from China on steel. So he indeed did put the tariffs on that. Copper, a little bit, not much, because it's an industrial metal. We're going to have to use it in a great deal of things. And all of the AI, everything runs on copper. So I think we're going to see copper, gold, silver, which is used in all of lead for making keyboards and whatnot. I don't think we'll see any tariffs on those on silver and gold, Steve.
Yeah, and you mentioned, you took the words out of my mouth. I was going to ask you next about Dr. Copper.
Sure.
Jensen Huang, CEO of NVIDIA, yesterday said that they need copper in their chipsets, right?
Oh, absolutely. Absolutely. And not a little bit, a lot. And the question becomes, how much is strand wire going to be? And, we have enjoyed quite a rally in copper recently, making new highs, seeing it at the 5s again. I haven't traded it there in a long time. The question becomes how much is available. I think the real trick, Steve, is to start watching the Chinese depositories. China's down 52% on receipts right now. So if they come in, remember, copper consumption was 63% of the market was controlled by China. So let's be very realistic here. Watch China, see what they start unloading. If they do, then I will be watching mine number 1 and mine number 2 in Chile. And if they start to see a lot of product, including solvents, going out, then we'll hold these levels and possibly even go higher.
Yeah, and right now copper futures now sitting here in the continuous contract spot now sitting at up 1.42% at 508.
Yeah, that's a big move.
That's a big move. And let me ask you, I mean, the forward contracts here, are we going to continue to be in contango, or are we going to see a little bit of backwardation here?
Well, contango occurs usually twice a year in that market. So first off, it's no surprise.
Yeah.
Secondly, the demand is if it takes 2 months of good solid demand to really put a dent in some of the reserves. So I think it's really tough to call the market, other than the fact that goes to my last point. Strength is made by consolidation. If it stays above the 5 area, and remember, a lot of people get confused. Let's get our viewers some facts here. The LME is 2.2, which is called a long ton, 2.2 thousand ounces, versus the short ton, which is traded in America. So you'll see a little discrepancy in price. So don't get confused between London and America. It's the contract size. So I just wanted to throw that out for our viewers. And the thing is that consumption could and probably will stay good. Something that hasn't been discussed at all is we lost 12,000 homes in California. Yep. And what was the important thing was all, not some, all of the above ground infrastructure, the heavy duty 4-inch to 6-inch cables that are running electricity are gone. Yeah. So they're going to have to rebuild the entire infrastructure, 400 pounds of copper to every home there. There's a lot of product going to be going into that reconstruction, just in that tiny spot in the world alone,
Yeah, and I'm looking at contango right now. For those of us out there that don't know, contango is where the spot is lower than the futures contracts. Backwardation is the opposite, where the price is lower in the future. And contango right now, we're seeing it at 508.80 right now, 1.43% on copper. But in May of next year, we're seeing 525. That's a huge move in copper, right?
Well, it's a huge move because, Steve, the one thing that will dictate to you your contango is your carry cost. Yeah. And what carry cost is calculated by using the interest rate. How much is my money is going to cost going into next year? And if the Fed probably won't do anything, but it's hard to say. But if we see rates continue down, the contango is huge if you look out that way. So,
and what about storage? Is there issues with storage right now in copper?
No, warehouses are not at capacity. There is room for storage, so I don't think that will put a squeeze on the market.
Okay, that's good to know. All right, well, Peter Thomas, my friend for many, many years, Mr. Gold and Silver himself, and AuSecure. And listen, for those of you who don't know, you can actually buy gold and silver and platinum and rhodium all right from our platform here at Quasar Markets, right?
Right.
It's a great pass through. So, once again, Peter, thank you for joining the show, and
we'll
see you again, man.
I'm always happy to help out, and looking forward to our next show, Steve.
Thank you, guys. What a great interview. Peter, want to say congratulations, by the way, on your podcast. I know you guys just declared the #1 podcast in India for gold and silver. Is that correct?
Oh, you saw that? Oh, yeah. Okay. A million hits. That's not bad.
That's crazy.
My good friend at Gold and Silver News, who has been doing it for years, a very, very hard worker, and I was fortunate enough to do a show with him. And the Indians, I do Dubai, Abu Dhabi, the Kingdom of Saudi Arabia, and I've just sort of dipped my toe into India recently on my international news, and people are starting to like what I'm saying.
Well, we're seeing a big move in India also for acquiring metals and a desire to do so. So it's great to see that. So congratulations.
Thank you so much.
Thank you again so much for joining us. We'll have you back soon to talk with Steve in a few weeks and tell us what else is going on. I also want to mention, as you know, I'm a big Bitcoin guy, and I don't think Steve mentioned it. You called it at 105 to move from Bitcoin into gold.
Oh, you remembered that, huh?
So I did want to point that out. I did mention it to Steve. He kind of hid that one.
Yeah. Well, Howard, at 105, I came on for all of our viewers here at Bloomberg and CNBC and said, hey, guys, send your Bitcoin in. And we had a third party do that because we didn't want any problems with it. Right. And then they transferred. At 105, we were purchasing gold 28s, and so Bitcoin came down and gold went up. So the spread worked real well for our viewers.
Absolutely. So again, everybody, you can find Peter at AuSecure.com. Also, he is Goldbug111, I believe it is, on Twitter. Make sure you follow him because he gives you all these insights. Thanks again so much, Peter. We'll see you next time.
Always good to see you, Howard. I'd stay well, huh?